Hey, how's it going? Welcome to Jazz After Dark. One of those days, I took a nap. I'll be honest with you. I don't take naps. I've probably mentioned that maybe 3 times in the whole existence of this channel. But it is actually dark here. It's actually 11:14. Can't see it. 11 something. At home here, Jazz After Dark, brought to you by Woodford Reserve. The nice people with there didn't send this to me for free. I went to the store and I purchased it. But if they'd like to send stuff, we're happy to accept it here. Just letting you know. I believe I have reviewed Woodford Reserve. It's a great everyday kind of a thing. Not that you want to, I guess, do that every day, but it's very good. I've never had a problem with Woodford Reserve. I really enjoy some of the drinks that my wife makes that are more along the old-fashioned kind of world there. Very good with Woodford Reserve. I'm not going to waste any time here tonight. We're going to dive right into it. So if you don't know us, we're financial advisors here, and we do not invest in mutual funds. We don't buy things like that that cost clients money. What you see on our website is exactly, what it costs. We don't have things that we sell. We just wanted to kind of put the transparency out there. What other advisor just puts on their homepage what it costs to work with them. Now, the way we do things is obviously very important because we've chosen to operate as a business that if your account grows, then we grow too. If your account goes down, we don't grow. So obviously every business wants to grow. So that's genuinely how we operate. So it becomes very important that the dollars that we manage are managed accurately. And it puts kind of, it is not a sales pitch, but it puts our interest clearly in line with yours instead of just saying, buy an insurance product and we'll take a little kickback, or buy this mutual fund and, we'll somehow get a kickback for that like other advisors do. Not that that's wrong. It's just not what we do. So we manage $250 million, actually more than that, but directly here we manage $250 million. We also are able to manage clients' 401ks and other accounts, but we don't have as many choices there, so I don't include that in today's mix. So I want to kind of share with you a little bit of how we're investing now, and if this is interesting in any way, then we can continue, touching on it, making videos as we go. But if it's not, I'll just, get out of the way and go back to my Woodford Reserve and a nap, apparently. That's shocking. All right. Here's how this goes. So if you don't know, we actually break it down into a couple different things. So these are 3 funds just randomly picked. I just wanted to type it out. I literally used the Google Slides thing. So it gave me 3 things. I said, well, let me put 3 funds in there. We have various funds. And I should mention, as an advisor, we have to have very aggressive funds and we have to have very conservative funds. So if we do this again and I share with you like our most conservative fund, it's not supposed to, and it's not going to beat the S&P. That's not the goal, right? Imagine if you're 40 and you're watching this now, one day you're going to be 75 and you don't want to take, with all your dollars, you don't want to take, market level risk. So understand that once we get into looking at performance. So we have one fund we call the Aggressive Stock Fund. I put a little information about it there. Typically, we have about 30 stocks. We've gone up to 42 as our peak. But typically, this is for those people that say, swing for the fences, Dustin. Be as aggressive as you can. We have a large cap fund, which is all stock-based as well, anywhere from 30 to 50 stocks that you'll find in there if you're one of our clients and you look at the large cap fund. And then I just put a conservative fund just to share something different. From time to time, we have used ETFs in this fund. I should point out that we use ETFs in a different way than the average retail investor, whereas we don't, how ETFs cost money. Well, if you're in a wholesale business, you know that, you can wholesale a product to somebody can mark it up and they can sell it. They do the same thing in the ETF and mutual fund world. We just choose not to do any markups there. So, and you can see that. Every client can see that clear as day. So what I want to point out here is, and I don't know how clear you're going to be able to see this, but kind of want to just talk about one of the funds. And I'm not cherry picking. We'll go through all of them if you want. But for example, this year, large cap has done well. The the factor itself has done well. It's called a factor, the large cap growth, large cap value, large cap index, right? Those are called factors of it's just how you break it down. And so I want to take a look at that because a lot of you that watch based on the statistics of this channel, you know, I like my data. A lot of you would fit into a category where something large cap fits your bill. Now, we have not been 100% invested in the large cap fund. So we can have 30 to 50 individual, and to be fair, I should have put positions, right? A position can be cash. You ever seen that? In a mutual fund, they say you have, you know, this stock, this stock, this stock, this bond, this whatever, and 2% cash. Or usually it says FDIC cash. Well, that's a position. So it's not a stock, it's a position. So kind of shame on me for not putting position there instead of stock, because currently, there you go. I'm not allowed to show you the positions without getting in serious trouble from the SEC, but this is directly taken from our accounts, right? So in the large cap fund, we currently have $32 million of client funds. And I'm going to explain that a little bit more in a second. Why is it not 250 million? That's because we have numerous funds, and I'll show you the kind of the breakdown. So we have 32 million in there. Just want to point out, these are the weightings of the positions, and cash up here at the top, which I'll just tell you, that's cash, right? Well, can't get in trouble for that. Cash is our biggest position. We have 16% in cash. And so we've gone, and this started actually, our clients can attest, this started not last November, but the November before. I do a weekly class for clients where I will update you on things going on from, you know, any government changes to changes in the portfolio. And 2 Novembers ago, I vividly remember the classes. I was saying, you guys can dislike me if you want, but the market is going up for no reason at all. Literally no reason. We are beyond any earnings reasons. We are just purely driving, the markets are driving higher on thin air, and I don't want to be a part of it. So I would do a class and say, you know, we sold 2% of this portfolio, so therefore we have 2% cash. And then the next week I'd seem to come back and, well, we have 3% cash now, or sold, so now we have 5% in cash. And I would say, well, we sold another 1%, 2%, 3%, and we worked our way up to, I think it was 21% in this fund. So that stayed that way. So since 2 Novembers ago, we have had 16% in cash. And when we get to performance here, you're going to see that that helps, right? The market fell over 20%, and large cap stocks really kind of took it pretty hard. So to have, we'll just say 16, for the most part it was 20, but to have 16% not participate in a 20% decline, that's how funds look like they're beating the market. You ever see that? You think this fund at this moment in time beats the market, and you get excited and you buy the fund. Great. I'll show you a chart of how we're beating the market, and you might think, great. But it's misleading, and I'll just volunteer and tell you, I'll be the one to tell you. It's misleading because mutual funds can have as much as 5% in cash, unless specifically dictated in their prospectus that it can be different, but that's usually not the case. So mutual funds can have 5% in cash. Well, that means they could have 1% in cash, then magically 5% in cash. So if the market falls while they had 5% in cash, what do you think the graph looks like of performance? They were going up with the market, then they maybe got lucky and went to 5% cash, and the market fell, but they didn't fall as much, right? Because they're not 100% invested. Then the market bounced, and they're not bouncing as much, but they look like they're beating, right? If you're familiar with looking at performance-based charts, you would see that real quick. Most people don't. I get that a lot. We'll manage somebody's 401k for them, and we'll pick a series of funds, and they go, why not this one? This one's killing it. And I have to point that out. It's killing it, but here's why. And so it's not, technically true. So anyways, cash is our top holding there. Here's a breakdown of the dollars of the other rest of the positions. I don't know if this is interesting, but I thought this would be fun to share because I don't think I've ever shared this publicly before. Moving on. So here's what I mean by this. Now I specifically cherry picked this, right? Just to show you. If you look at, this is the exact taken, I didn't make this chart. It's from our portfolio reporting directly. If you take a year-to-date performance of, now I'm showing our large cap fund, but you could say any large cap fund here. You don't have to pretend we're magic or something. But you know, I do like a weird job of like underselling ourselves. I should be more like cocky and arrogant or something. I've always missed, my wife says I should do that. But anyways, you could very easily, and as I have here, admittedly, cherry pick the dates. Now it's just year to date, and it's just coincidence that this year so far, the market has gone up. That's it. It's purely coincidence. Just like last year, it's purely coincidence that the first trading day of the year, I don't remember if it was the third or fourth or whatever, the very first trading day of the year happened to be the top of the market. This year, it happened to be the bottom of the market, right? Or for the moment. So that's the only reason I chose year to date, and knowing that the chart would look like this. The blue line represents our large cap fund, 11.12% as of right now, today of this recording. I think I have to legally say that. And the market's sitting at 6.24%. This is not because we outperformed, and I mean, we have technically, but it's not because somehow we're moving faster. Now you know the truth, right? You go back to that previous slide. We can't be moving faster because we have 16% in cash. The S&P does not have a cash position. So why does it look like we're doing so much? Well, not look like, but why are we doing so much better? It's because we haven't fallen as much. And that's a return in itself, I think, fair to say, right? That's a return. If you managed $250 million, you would want the value to fall slower than the market and, where applicable, rise faster. Right? Of course, that's like a dream world, right? So that's the reason it looks like that. Now, I'm very happy. We're doing obviously great here. And if we go back, we have the opportunity to take the 16% and, of course, scale in and use it as we go. And we plan to. We definitely will. One other thing I'd like to point out, we don't actually let clients, and I mean, I guess you could ask, but we don't let clients just pick one fund and say, do it. Because then that would be like a robo fund, like a robo advisor kind of thing. It wouldn't really be very personal. So what we do is we actually say, oh, I've learned a little bit about you. Therefore, I know you don't need to be 100% in a large cap fund. Let's say you had $1 million net worth and we managed 880,000 of it. I can't put all your money in a large cap growth fund if you're 63 years old, right? If you're 40 and you've done quite well for yourself, all right, you can afford some ups and downs, but I still probably wouldn't do that. So the way we do it is we call them mixes, and this is not very pretty, I will tell you, but for example, the aggressive mix is just a name that's made up of the various funds that we have. And it's not just these four. I just ran out of space. But and so what we do is we say, okay, you can afford to be aggressive. Therefore, at the moment, I know that when I compare and put all these funds together, I know that this is the optimum growth profile. In other words, I'll know that 16% in this fund, 24% in this one, 14 here, and so on, beats 18% in this one, 21% in this one. You know what I'm saying? We can run that model and say, what's the most optimum performance? I've often teased that as a video topic. I don't know that I've done it, but the TSP is a great example. The TSP is just like us. They have a limited amount of funds. We happen to have more at the moment, but they have a limited amount of funds. So if you have a limited number of choices that each grow differently, is there not an optimum mix for given your goal? There is. If you tell me 42, I have this much in net worth, I've got some extra income, I plan to retire at this age, blah, blah, blah. If I only have 7 choices, can I not figure out exactly what it is? Yeah, it's line by line. You go, and I don't do this by this is all computerized these days. But you go, okay, what happens if you go 100% S fund? Whoop, that's too much risk. Okay, what happens if you go 50-50 S and C fund? That's fine. However, if the person had most of their net worth in that and they're counting on that and they may need to retire early or something, let's change it. Okay, what if they go 20% this one, this one, this one? So you get what I'm saying. I don't have to ramble on about that. So we have an aggressive mix, moderate mix, growth and income mix, and a conservative mix. And I did that purely so people could see what levels there are. Now the levels can, you can break yourself out and we can go as customized as you want. But that's how that really works. So don't let me mislead you there. And again, I'll undersell it, but don't let me mislead you into thinking like that I'm going to just say, oh, large cap fund, that's where you need to be. I highly doubt that. I would be willing to bet that it's much, much different. So anyways, that's a little breakdown of how things work here. That's a beginning start to how we're investing and planning to invest in this fund. I thought about doing all of them. It's just, that'd be like a 40-minute video. I don't know who cares that much, but this is legitimately where our large cap fund stands at the moment. This is the percentages and dollars of how we're investing, and more importantly, what cash we have available to use on the market pullback. And I'll do that for clients. As we put in 2%, we'll have a class and say, hey, we put 2% into our large cap fund, and did you see where it went? If not, let me show you the positions that we bought. And, of course, clients can see that as well, but it's pretty cool. I think it's cool. I mean, I like talking about this stuff. And so I took a shot, threw out a different video topic there. We do check feedback to see what you think. If it is interesting, we can continue. Oh, I forgot to tell you, that's why there's 32 million in this fund, why there's not 250 million, right? Because some people are better suited for some of this one and some of this one and dividends. Some people only are focused in dividends. We don't have many clients that do this, but sometimes a client will come to us and say, I have X number of dollars, but I would like to build a custom dividend fund or use your dividend fund or something. But my retirement is sort of in my TSP or something. We'll still help with that. But that is a reason why we may go, left versus right. And so our dividend fund has so many dollars in it. We can share that as well. But all of our funds really, we don't have all of our dollars in one fund is what I was trying to spit out there. And not bad. So a little long today, but hopefully helpful. And let me know what you think. If this is interesting, let me know. We can follow up with it, but I cannot legally say do a video and say, hey guys, we went from 16% cash to 13, and we took those dollars and put it in NVIDIA or whatever. You notice I don't do that, not because I don't want to or don't want to share that, but highly, highly against the rules that we've agreed to follow from the Securities and Exchange Commission. So nothing that what we've shown today breaks those rules. And of course, I do have to let you know that if for some reason you think that you want to have 16% in large cap stocks, that you should consult with your financial advisor, blah, 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 get financial help. I'm not making recommendations and, all that stuff. So just for fun. Oh, educational purposes only. And yeah, you get it. All right. Thanks for watching, and we'll see you tomorrow. Adios.